Hey folks, Chris Versace here, and thanks for tuning in to the latest edition of the What Does It Mean podcast. Joining me is Bob Lang. Lindsey Bell has the day off. Bob, how are we going to get by without Lindsey? I mean, she's the brains of the operation here.
That's right. What are we going to do, Chris? I'm feeling like the scarecrow from A Wizard of Oz here without the brains. I mean, that's Lindsey. And
Well, you know, I'm kind of glad you said that, so I didn't have to, Bob. Thank you so much. I know we got a jam-packed episode today, and there's a lot of things we're going to talk to, everything from the Fed and why they might have to actually recalibrate the pace of rate cuts coming off of some of the data last week. We're going to talk about Amazon firing a warning shot across the bow, with more folks potentially having to return to office. Andy Jassy saying starting January, up to 5 days. We'll talk about that, implications. And finally, sticking with Amazon, they are kicking off their latest Prime event. That's right, Big Deal Days is here in October. Is it going to pull forward the holiday shopping season? What does it mean for the holiday shopping season? And oh yeah, there might be some pesky comment in there about some no longer happening longshoreman strike. But well, you and I, Bob, we're going to break all that down for the folks who are joining us today. So everyone, hang tight. We'll be right back. All right, folks, thanks for joining us here with the latest edition of the What Does It Mean podcast. Bob and I are going to tackle the first topic today. Bob, were you surprised at the strength not only of the September employment report, way more jobs than anybody expected, but also, too, the real strength that we saw in the September ISM services PMI? I mean, clearly services is carrying the economy, but overall, Bob, it tells us the U.S. economy, I won't say it's on fire, but it's doing a lot better than folks thought.
it's pretty strong, Chris. And what we found out in the jobs report, along with the revisions from the prior 2 months, which were revised up in August and in July, was that the economy is really not slowing down as much as the Fed had anticipated it would. And I still think that this month creates a lot of surprise for everyone, pleasantly surprised for the Fed. I heard a lot of Fed speakers in the last couple of days and after the jobs report came out on Friday, Chris, and they were happy and pleased where things are. I think that they're worried about being a little bit too aggressive on the rate cut front. And I'll tell you why. It is because the Fed is looking for more of a slowdown. And if they're not getting it, why do they have to be aggressive in rate cuts, right? So I
agree wholeheartedly with you, because if you think back to August when people were freaking out, the concern was, oh my God, hard landing. And really ever since then, the data that we've gotten initially supported a soft landing, but coming out of last week, it really tips the scales towards this no landing scenario. And I heard the same thing you did, Bob, that, you know, the Fed is likely to slow walk rate cuts. And surprisingly, the market going into this week was still a little bit ahead of themselves with the pace of rate cuts, thinking that we would get 3 25 basis point rate cuts by the end of the year. But they've started to soften. The 10-year Treasury yield is inched up closer to 4% or so. The CME Fed Watch tool now shows maybe 2 cuts. But I'll tell you what, Bob, I am waiting for this latest Atlanta Fed GDP model update, because coming off some data early last week, it was revised down to 2.5%. I don't see how it is not only not revised higher, but it's got to have at least a 3 handle in this next revision.
Yeah, and of course, you know, we're only a couple of weeks into this quarter, right? And so there's going to be a lot of movement here. I agree with you. I think it can't be less than 3%. It could be, but I mean, highly unlikely with all the data that we've seen supporting a very, very strong economy here with low inflation. The one thing that really interests me, Chris, and I think we'll talk about this a little bit later, is productivity. And productivity has been very, very strong. And mind you, this last labor report, Chris, I know you saw the increase in wages month over month and year over year. And normally that would be something very troublesome. But the fact of the matter is productivity is strong and people are going to be making more money. If they're working harder and they're working jobs and they're getting hired, like we've seen the past couple of months, wages are going to go up. I mean, it's just a natural thing that happens within the labor market. So I don't think that was a bad thing. And normally the market would have taken that poorly, and we would have seen the markets drop severely, and we didn't see that on Friday. So I think that the market understands that even though higher wages are inflationary to some extent, I don't think it's a bad thing for the economy and the rest of the companies. What do you think, Chris?
Well, I think you're right, Bob. I think you're right there, no question. But let's stop for a second. And instead of looking backward, let's look forward, because we are getting some big data this week that the Fed will be paying attention to. I'm referring to September CPI and September PPI. With those reports, the amount of data left for the third quarter is really pretty small. But as we know, everybody and their brother, everybody and their sister will be focusing in on these upcoming inflation reports. But here's the thing, Bob. If we dial back to that same September ISM Services PMI, the prices component jumped. And it didn't jump a little bit. It jumped all the way back to the highest level of the year since January. And my concern is that if folks are expecting a lot of incremental progress in the September CPI, PPI, focusing on the core, they're not likely to get it. They may get some, but they may not get as much as they were thinking. It's also possible that we don't see any progress. And I say this because, remember, the September core CPI was around 3.2%. The August. Bob, you're supposed to jump in there and correct me. August core CPI was around 3.2%. The August core PPI actually ticked higher compared to July. And if we see numbers around those either flatlining or ticking higher, I think it's going to be another reason that the Fed officials are going to say, man, we don't need to do anything anytime soon.
Chris, I'm looking at the Cleveland Fed inflation nowcasting, and they're forecasting for September's core PCE at 2.66%. So it would be lower than what you read out for August. The headline number for CPI, which is going to be coming out this week, about 1 point.
Whoa. Didn't you just say that was the core PCE?
Core PCE, yes. That's an estimate.
And that's not what I said. I said CPI and PPI.
The core CPI still coming in at under 3.2, so about 2.95%. So it's still lower than we had in August.
That would be, if that forecast were to happen, that would be a big positive. I think it would reassure folks that despite what's happening, inflation is still coming under control. But we will see. We will see what numbers we get later this week, Bob.
I think that the Fed is going to be looking at this very carefully. It's this interesting week, Chris, because I think there's 15 Fed speakers, something like that this week. And Thursday, we have the Eurozone's conference, which is similar to the Jackson Hole one that we have here in the United States. It's going to be coming out on Thursday. And there were 5 Fed speakers at the Euro conference in Germany this Thursday. So it'll be interesting to see, because the CPI number will be out on Thursday. PPI is out on Friday, the 11th. So yeah, I think it'd be very interesting to hear the comments from them, and especially after these numbers come out. And then also, some of these Fed speakers are going to be commenting for the first time since that jobs report came out last Friday. So I think by and large, this committee is looking for an excuse to cut rates, Chris. And I think that this strong jobs report with lower inflation is going to be it.
Do you think Hurricane Helene and potentially what we might see with Hurricane Milton is another reason that the Fed might just simply opt to do 2 25 basis point cuts, one in November, one in December, irrespective of what the economic data is?
Sure, absolutely. And I think that one of the problems that the Fed is going to be facing here is a resurgence of inflation, at least in the short term, right? We've seen oil prices rise up sharply, not just because of the hurricanes, Chris, but also because of the Middle East crisis that we've had going right now, that it seems like every time there's an explosion or some shooting and so forth, we see oil climbing up, anywhere from, 3 to 5%. It's gone up quite a bit, Chris, over the past, week and a half. Crude oil has gone up about 12% on the West Texas, and the Brent has gone up even higher. So I think that these things, or these inputs here, especially crude and natural gas coming into the economy here, are going to be some headwinds for the Fed when it comes to determining whether inflation is truly under control in the short term.
So even though, let me back up a second, because I asked you about the impact of the hurricanes, And you kind of agree like, yeah, well, that might be helpful. But then you're saying oil, might be pushing against the wrong way because of a reacceleration in inflation or potentially not a lot of progress. So it sounds very confusing, Bob. And you and I follow this every day. So I have to think that the average listener out there is kind of scratching their head going like, oh, what should I be thinking about? What should I be paying attention to here? What I think here is that there is a lot of noise, right? And I think when there are moments of a lot of noise, we kind of have to step back and put ourselves in the Fed's shoes, right? There are really two things that they focus in on, right? Maximum employment, stable prices. So I think we always have to default back to that in our thinking. And if we go to that, maximum employment is improving, tells us the economy is good. People are making more money. That's a good thing. I think we can all agree on that. But what you're saying is inflation could be the specter that kind of tips their hand or does not tip their hand.
That's right. And I think that is a great unknown here. And so far, the Fed is, with their stricter policy or very tight monetary policy for the past year and a half, has done a great job in snuffing out a lot of the inflation that came in following the pandemic. And, from 8-9% inflation in 2021, we're down to, we were talking about, straddling to 3% area on the higher low end of that. So that they've made a lot of progress here with the strict monetary policy. But I do think that there's worries out there, and the Fed is going to be concerned with things like the hurricanes, and hurricane season is just really getting underway. And I think we'll have hurricanes until maybe the end of November, maybe it's to the beginning of December. Who knows how much longer these things are going to last? But the damage and the devastation that is done from this is going to be felt by everybody across the economy. It's not just with oil, which I mentioned before, but also with rebuilding, with insurance. Insurance, crazy, Chris. I mean, we talked, Lindsey, about that last week. Insurance prices have gone through the roof. I think there's some people out there in Florida that say they can't even get their home insured because the insurance companies they've just walked away. They don't even participate in offering any policies any longer. So I think that those issues there, and especially rebuilding homes, it's going to be very expensive to get that all done again.
So it sounds like we could be entering a point in time where the Fed's a little more cautious, just like they were in the spring, where Powell's message was, we're making good progress, but in order to cut rates, we need to see more good data. It's possible that we see them slip back into that mode, it sounds like.
I agree with that. And I think the data is going to guide them. I think when they shifted away from forward guidance, which when they bring forward guidance in there, I think people get a little bit worried and nervous that the Fed is looking too far ahead at what the data should look like, as opposed to stepping back and saying, look, we'll just let the data speak to us and tell us what to do. I think, shifting away from that forward guidance was a good move. I don't think they really needed to be doing that. I think that worries a lot of people in the markets.
Well, let's talk about the markets for a quick second, because, we've had a significant run ever since the market kind of wrapped its head around the fact that, yes, the Fed is, to use Lindsey's word, recalibrating monetary policy. But as I joked earlier, there might be some recalibration to the recalibration. Does that make you a little nervous about the market, Bob, in general? Because I will say that certain parts of the market, home builders, for example, some of the construction related areas that are very interest rate sensitive, they really ran up over the last few weeks, and they've started to kind of soften a little bit. I also think that, the news that the Fed was going to recalibrate helped push the market higher, really stretched the valuation from a PE basis when you look at the S&P 500. I think technically short-term overbought, you were saying. So there's, is it possible, Bob, that all these things could be setting us up for a little bit of a pullback in the market, or at least in other sectors like home builders, construction? What do you think?
Yeah, I agree with that. I think that as we head into earnings season, it's going to be important to listen to these companies and what they have to say going forward for their forecasts and their estimates for 2025. And I think that those areas that you talked about there with home building and retail stores, I think, there's companies like Lowe's and Home Depot, Chris, and Builders First, which is in our Street Pro portfolio, are names that are going to benefit from this time period, especially not just with the storms that are out there, but also with lower costs, especially PPI starts looking much better this week. The biggest thing is that the consumer is spending again. We talked about that last week with Lindsey in this jobs report. I can't just get over this thing, Chris. I said people are working, people are getting back to work, and they're spending money, and wages are improving. This is just really strong for the economy, and I think all the way around, the Fed sees this, and we have to believe that if this continues, especially going on to the holidays here, that's going to be a positive thing for the economy.
All right. Well, you're getting a little bit ahead of us. So let me wrap up what we're talking about here, Bob, before we move on to our second big topic of today's podcast. When we take a look at all that's going on, we are seeing a stronger than expected economy. That is certainly good news. However, good news for the economy isn't always good news when it comes to the pace of Fed rate cuts, or good news for a market that is really expecting the Fed to do more. We're going to have to continue to monitor the data, course correct. Not all sectors are likely to move higher. If we continue to get more good data, that may not be good for the market and for the pace of interest rate cuts. So pick your spots and let's move on, Bob. So topic number 2, CEO of Amazon, Andy Jassy, recently said, hey folks, I know you've enjoyed this work from home nonsense, but sorry to say, come January, you will be going back to the office 5 days a week. I think that caught a lot of folks off guard, but you know what, Bob? During the third quarter of this year, roughly 33% of U.S. companies required employees to come to the office full time. That's data courtesy of Flex Index. So 33%. I mean, there are some jobs out there that I hate to say it, you have to be in the office to do it, or that place of work, right? You can't work for a retail store or a grocery store and not show up. There's no digital equivalent. What do you think about this, Bob? Is Jassy onto something? Do you think more companies will follow, or do you think workers will freak out?
Well, I think both things are going to happen. I think Andy Jassy is right, and I think a lot of companies are going to follow his lead in opening the office back up and getting people back in the door. You know, what is it going to take to get people to go back to work? Is it free parking? Is it free food? Is it a workout gym or something like that? Who knows, right? But whatever the case, they want to get people back in there because productivity seems to be much stronger when people are back in the office than when they are at home. And there was an article, Chris, that was written in 2022, about 2 years ago. Microsoft released a study, said that over 85% of leaders said that the shift to hybrid work made it very challenging to have confidence that their employees are actually being productive. Elon Musk came out and said, not too long after this article came out, and said that, look, you know, we need to have our employees visible in the office or in the production line, that he believed that most remote workers are, quote unquote, phoning it in and only pretending to work. And yeah, I think he could be right there. Not in all cases, of course. As you said, you know, there's some jobs that require you to be in the office.
Does he think people are skipping out for tennis lessons in the middle of the day or going to Costco? Is that what he thinks?
Oh, you know me too well, don't you?
I do. But you're able to get your stuff done, Bob. I mean, I think there's a balance between babysitting, enabling people, and allowing them to operate and function as, you know, capable adults, assuming that they can. I mean, I can see ultimately where if we go back, you know, where there's a degree of flexibility, maybe it's 3 or 4 days a week in the office. I do think taking back that Friday or that Monday makes it, you know, a little challenging, because there is an incremental amount of not only flexibility, but there are times when you need to kind of lock yourself away in your office or at home and kind of focus on the project at hand, whether it's putting together a proposal, preparing a PowerPoint, preparing a budget, or in my case, sitting back and, you know, really digging into a company that I might be contemplating putting in the bullpen for the Street Pro portfolio, which is something I was doing yesterday afternoon. But Bob, let's say for argument's sake that more firms have people in the office more days a week than we have. Who benefits? Let's slap on our detective hats as investors and say what areas are likely to benefit.
Yeah, there's a few interesting areas that I think are going to do well. Let's say, how about the cleaning firms, the companies that do housekeeping or cleaning in the offices, right? They haven't had to do that since people have been away from the office. So that group, that sector over there is probably going to get some interest. I would also say that, maybe uniform firms like an Aramark or a Cintas, or maybe even retail stores that sell clothing or neckwear. I'll do a little anecdote here, Chris. A friend of mine who lives in California, who I saw last week when I was there, owns a neckwear firm, and he's owned that firm for 20, 22 years. He's had really good business, but certainly for the past 2.5 years, his business has exploded, Chris. I mean, through the roof. I mean, he doesn't just sell neckwear, but also pocket squares, socks, some shirts, and so forth. So men's furnishings. His business has just gone through the roof, and I just don't know why people are looking for our stuff and they want to dress for success and get out when they get out to the workplace, or even looking for a job or just out to the workplace.
So when you say neckwear, for the layperson and people who are a little younger than you and I, you mean tie?
Ties. That's right. Ties.
Okay.
Bow ties, that sort of thing. Yes.
Yeah, no, that's interesting, because I would have thought that the return to office, the dress would have been continuing with, business casual, not quite so business-y, i.e. suit and tie. Because I'll tell you what, not recently, this is a little off topic. I went to go buy a suit, almost impossible to find.
I'm able to buy a suit or coat off the rack. I mean, but there was nothing available.
No, you go to Nordstrom's, okay, there was a bunch of stuff, but nothing really, jumping out. But like Neiman Marcus or some of these other, department stores, nothing. What I saw, Bob, was a lot of urban wear, which really kind of floored me. But anyway, that's a little off topic. And you're right, little me, I can't buy off the rack. But what about, fast food stores, whether it's like a Starbucks or a McDonald's, more people going to work, picking up breakfast, coffee. Maybe it's good for Starbucks, like I said. Maybe it's good for Dutch Bros. Maybe it's good for Pete's. I think there are going to be other supportive services and businesses that benefit if we see this renewed push for back to the office. And, I suspect that we are going to see something, Bob. And the reason I say this is the Wall Street Journal had an article recently where it said that 79% of U.S. CEOs that they talked to think that the working environment is going to shift over the next 3 years. I think it kind of makes a little bit of sense, as time goes on. We've all gotten, a little more back to normal. But I wouldn't be surprised if some folks put up a fight.
No, I agree with that. But I'd say that 79% is a pretty high number, if you ask me. I think there's a lot of companies who are much like, Salesforce, for instance. They shut down their whole building in San Francisco and told everybody that basically permanent hybrid or stay-at-home work. I mean, that's a big company. They have a lot of employees over there as well, too. So I think that number is pretty high. I see the 17% expecting some sort of a hybrid approach. Again, I think that number is a little low. I think there's going to be more companies that adopt the hybrid approach, flexibility of letting people come in to the office or stay at home and do their own work. But I do think that the trend is going to be moving into the direction where Andy Jassy is saying, you know what, more days in the office. It may not be 5, maybe something like 3. So, some kind of compromise there.
Yeah. The one area as I think about it, Bob, that companies might have to help employees as they move back to the office, because, people have been able to make alternative arrangements as it relates to their kids in school and after school care and all that other stuff. But if they want more people in the office, that means longer days, longer hours. Perhaps employers might have to contemplate companies like a Bright Horizons Family Solution or other childcare services. Something to think about. I think ultimately we'll have to see where this all goes. So as I look to wrap this up, Bob, one of the things I'll be paying attention to during the September quarter earnings season are comments from CEOs when it comes to 2025 and beyond about getting more employees in the office more days a week. I think it's going to be I don't expect it's going to happen overnight. My thinking is it's going to happen as a continuum, and it's going to be something that we have to monitor. But some of these companies that serve to meet the needs of employees going back and spending more time in the office could be sleeper hits over the coming quarters.
I agree with that. And so to wrap it up, Chris, I'll tell you, I was a little bit surprised about the data that you presented there, but to a certain extent, I think that shift in people working from home into the office is going to be felt. Now, again, productivity is a big thing. Productivity has been strong in the past year and a half, but I think that by and large, if that continues to be strong, I think the hybrid approach is probably going to work the best.
All right, let's move on to our final topic of the day. This is one I know that's going to be near and dear to your heart, maybe to Lindsey's heart, but we'll find out when she's back next week. I'm talking about Amazon's latest shopping bonanza, Prime Big Deals Day. It kicks off this week. It spans 2 days, and research firm Global Data sees the event as the, quote, unofficial start to the holidays, especially because it has nudged many other retailers into offering their own deals and bargains. Companies like Walmart, Target, Kohl's, Wayfair, Big Lots. Big Lots is still around. Macy's, Best Buy, and Lowe's. So
I think Big Lots went to bankruptcy, Chris, recently.
Yeah, but I don't think it was Chapter 7. I think it was Chapter 11. So, I do think that Global Data is right. I think this is going to be a big pull forward. I think there's going to be a lot of, quote, deals and savings that are being offered. I think given the comments that we've heard about the consumer over the last, few months, about them being selective, choosy, use whatever descriptor you want, they're going to be on the hunt for deals. And I think this is going to happen. I've long thought that we were going to see a resurgence in digital shopping. It's far easier to price comparison shop. You can play the shipping, no shipping charge game as well, playing retails off each other. I agree with Adobe, who sees digital shopping really picking up wallet share this year, growing. I believe their forecast is 8% year over year compared to 2% or so, 3% for overall shopping dollars being spent this year in terms of growth versus last year. What does that mean? It means, of course, digital shopping is going to win out. Bob, what are you going to be buying during Prime Big Deals Day this year? You eyeing anything?
Well, I got to be looking for stuff for Tony, right? That's our Bob.
Yeah, well, for folks who don't know it out there, Bob is a slave to tennis, like I joked earlier, but he's a slave more to Tony.
He's our little pup, and we love him very much. So he's going to be number one on our list to find some goodies for the next couple of days. And you too as well, Chris. I mean, we'll be looking for stuff for you on Amazon Big Deal Days. Listen, I might find something of interest that you could use and hopefully not toss into the trash can. Hopefully, these Big Deal Days are really a lot of fun because they mark down stuff quite significantly, and we usually have a lot of fun things like some games and so forth. But I'll be looking for stuff for you as well too. The holidays are coming up, and I'm feeling the spirit of the holidays, Chris. How about you?
I will probably be taking a look, seeing what we need. I don't really think I'll be going hog wild with Big Deal Days, but you never know. You never know. I mean, the sad thing about Amazon is, if you need it, it's there the next day. That's right. My experience. So the days of going to the mall or going to other spots, I understand there are folks who like to do that, but I just find that Amazon and Prime in particular are just deadly.
Chris, there seems to be some sort of a game of chicken that goes on here around the holidays, right? It's when the consumer is going to get out there and start spending. And you said that you think that there's going to be some discounts that people are going to be paying attention to. I'm not talking about the doorbusters that get people through the door.
Oh no, those are total shams. They have one TV at some ridiculous price that they can tout to pull somebody in. It's never there when you go there.
So when is the moment that the consumer says, okay, I'm going to go in there and start buying because the deals are the best? Is it around Thanksgiving? Is it after Thanksgiving? Is it right before Christmas when the retail start to sing the register start to ring?
In the past, before Amazon started this October kickoff to the holiday shopping season, I think that there were those folks who would wait and wait. I won't say they would go out, Christmas Eve or something like that, but they would definitely wait till very close to the Christmas holiday to go out and shop, thinking that, oh boy, folks, a lot of inventory here. Look at the shelves. They've got to clear it out. Prices will come down. And in the past, that has worked. You have seen some initial deals around Black Friday. And then as time moved toward the holiday, you would see more and more. But this is a total game changer. And I think it speaks more about where consumers are today and companies trying to capture as much of their shopping dollars early so that they're not left out in the cold closer to the holiday. That's what I think is going on. And honestly, it's a force, for Amazon. But you know what Amazon has done, Bob? Do you notice now that they've got, in almost every quarter, they've got some event to help goose their sales?
That's right. And this last July apparently was a bonanza. It was the biggest sales they ever had. Amazon Prime Days in July. So every quarter they have something going on here. But what's interesting is that this last quarter, Chris, we heard some of these companies like Kohl's and Macy's and Nordstrom's came out and said that their margins were just horrendous. So if their margins are horrible, that they're obviously not pricing things correctly, and they've had to have major discounts. I mean, do we trust them to price things correctly into the holidays when we know that people are not going to pay regular price for items that are in the store? They're going to wait till they get discounted. Otherwise, these retailers are going to have to carry that inventory past New Year's and then discount them even more aggressively as we start the new year. What do you think?
No, I think that's right. I think you really need to delineate the types of retailers there are, because you're really talking about, when you say Macy's or Nordstrom's or some of these others, department stores. And we know by looking at the monthly data and the retail sales reports that department stores continue to take it on the chin. And some of this could be folks, shifting into buying clothing at Walmart. They own Bonobos, but, even Target, Kohl's, Amazon has made a significant push into fashion, really leveraging Prime, where you can try stuff on and return it. It's pretty impressive what they have done. I just, going back to my comment earlier, the one time I went into a department store or a couple department stores looking for suits, I couldn't find anything. And the service at these department stores, God help you if you need a service person, because you can't find them. You have to go looking for them. It's ridiculous. I would argue that, sure, there's some people who still like going to them, but for me, I think their time is done.
I used to work in retail after college, and that whole service issue was a big thing, but also carrying inventory. And we always used to say that the holiday period was like the Super Bowl of retail. But right after November 24th or 25th, they called it Black Friday. Why did they call it Black Friday? It was because that was the day of the year that your sales for the year went positive, went in the black from being in the red. If you were in the red all year long, there was that one day that things started looking up, hopefully for the next 5 or 6 weeks. So I was really intrigued by that digital number that you came out with, Adobe's expectations for 8% growth. It's not just Adobe. Deloitte came out with their forecast, very similar. I'm waiting on the National Retail Federation to come out with their forecast. I think they're all going to show the same thing, probably low single digit, let's call it, overall spending growth, with digital shopping just, eating brick and mortar's lunch. I saw something kind of funny and maybe a little tongue in cheek here, that once AI becomes much more developed and involved in everybody's life, that there's an AI assistant is going to tell people what they need to buy for their relatives or their friends for Christmas. So,
Bob, that'll be perfect for you.
I don't have to think about what to buy, right? It's going to tell me.
Yeah, that'll be perfect for you. Well, we'll see. That's a whole other issue, but I'm sure we'll talk about it. I do look forward to continuing this conversation about Amazon's Prime Big Deal Days and the competitive responses next week when Lindsey's on. I think in a couple days' time, we're going to hear a lot of these companies talking about, we did this and so many this and so many that. A lot of noise, because remember, a lot of these companies in the next few weeks reporting their earnings. I think they'll make a lot of noise. All right, let's take a quick break, Bob. When we come back, we'll wrap it all up and we'll get out of here. All right, folks, this is the part of the podcast where Bob and I share what stood out to us over the course of our conversation. Was it some little statistic? Was it some little fact that we didn't know about? Or was some persuasive argument that the other might have put forth? Bob, I'll let you go first and tell me how smart I am.
No, you're brilliant, Chris. It was a great conversation today. And I think that talking about the back to the office conversation was very interesting, very enlightening to me. And hearing that a lot of these companies are going to be forcing or arm twisting employees to get back to the office, it's going to be a big thing. So we'll see how they adapt to it. And I think there's a lot of employees out there that are going to go kicking and screaming. But at the end of the day, if they want to get a paycheck, they got to go back to work in the office.
Yeah, I think that makes sense, Bob. And, this is something that falls under the realm of, what I think thematically over structural change, right? There was a big structural change during the pandemic as to how we had to work. People really leaned in on the digital infrastructure that we have. But if we see this reversion unfold and really gain traction, I think there's going to be a number of areas, and we talked about some, and I'm sure there are others out there that investors are going to have to really think about when it comes to their portfolio. I think it's another reminder that you've got to keep your finger on the pulse of what's developing, asking the question, who benefits? Or in this case, what companies are poised to prosper should this happen? That's what a portfolio bullpen is all about. That you get your contenders ready. That's kind of what I think really stood out. I think it's a great lesson for folks because, just like an oncoming storm, it may get here. We have to consider what we have to do to prepare. It may flame out, so to speak. So we'll have to see. But it's a great, great reminder for what folks who are listening to this podcast for as they think about their own investment journey should be thinking about and should be doing. With that, Bob, folks, if you want to get more of Bob between now and the next edition of the podcast, march on over explosiveoptions.net. If you're looking for me, well, you can find me over at the Street Pro Portfolio. And when Lindsey comes back, we'll be catching up with her, and she'll be telling us all about her thoughts about the latest on the jobs front. And if you really can't wait that long, pick up her newsletter, The Shift. Thanks for listening, and we'll be back soon.